Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our weekly recap for the 30th of March through the 3rd of April 2020. We're going to go ahead and discuss a couple articles that were posted over on Facebook this week. We're going to go ahead and discuss the total unemployment numbers that were posted on Thursday plus kind of the total for March 2020. Then we're going to go ahead and discuss the four main indexes, take a look at their movement for the week. It was a bit slushy this week. We're then going to go ahead and take a look at stock futures, which can change it really anytime Saturday and Sunday as new news comes out. We're going to go ahead and cover and look at the entire S&P 500 performance, what stocks were up, what stocks were down. It was a bit mixed out there this week. I saw some stocks up 20%, such as oil, bouncing back, and I saw REITs kind of falling back after bouncing so hard last week. We will also look at financials, semiconductors, home builders, oil, the dollar, silver, gold, bonds, and then wrap it up by taking a look at mortgage rates. And of course, I like to do these videos on a weekly basis to kind of keep track of how the market has been performing during the current situation that is going on. That way it can always be looked at for historical reference. And as you know, right now we're sort of in a crash where everything is shut down. All businesses, small, mid, large businesses, they're no longer able to function as they would normally do. We're sort of social distancing. So this is sort of something new that's really not been done in any of our lifetimes that we've seen. So with that said, if you are brand new to my channel, have not yet subscribed, go ahead and hit the subscribe button below. If you enjoy this video, find it helpful, definitely give this video a thumbs up. And if you have any comments at all at any time about the stock market, this video, dividends, etc., go ahead and leave me a comment below. That's about it. Let's go ahead and get into the video. So I didn't post a whole lot this week on Facebook. I was pretty busy working from home. I feel like I'm not on my own personal stuff as much as, say, you are at work. Sometimes at work you get maybe too into it and then you dozy off. But so I didn't post a whole lot on Facebook this week, and I did make one video on Monday, make one video on Wednesday. I don't think I posted my Wednesday video onto here, but it was essentially going and recharacterizing my IRA contributions for 2019 towards 2020, or towards a Roth IRA for 2019. And then on Monday, I did do my 6 stock buys. I think it was either 5 or 6. My last 5 stocks. So it must have been 5 stocks that I purchased there on Monday. I put in $900, pretty good buy on all of them. And then throughout the rest of the week here, there's a lot going on right here. And I thought this was an interesting picture. So, we have live footage of the S&P 500 right now, and it's just a concrete block. But somebody had mentioned in the comments that there's there's a beam inside, and the bricks on the outside are mostly cosmetic. But still, we have unlimited quantitative easing kind of going on, and we're kind of seeing the potential that if unemployment continues to skyrocket, hitting as high as 32%, it may not be we don't really know what the future holds for us, because we don't know how long we're going to be doing what we're doing. We're kind of sheltering in place, we're staying at home, we're not going out. No businesses are really active unless they're critical businesses where you're getting your food, your health care products and such. So a lot of businesses are just everything shut down. And then a little snippet there on how many potential unemployment numbers could come out. We already have 10 million, I believe, within this in March. So we'll cover that here in just a second. And then a couple of stocks that recently cut or suspended their dividends. So up at the top, we have the companies that completely just suspended it for an extended period of time. We have Boeing. This is a pretty popular one. I saw a lot of investors continuing to average down. Now, I think it's a good idea if you were going to average down in order to hold it for the long term, but if you were only buying it for the dividend and it's no longer paying that $8.22 per share, and you're just mainly holding it for capital appreciation, but you're down 30%, it could be hurting there for quite a while in the negative unless you're continuously averaging down. Cracker Barrel, the restaurants, they had to shut all their restaurants down, so anything related in the restaurant industry that, there was Cracker Barrel. I think there was another, Texas Roadhouse, that's something here locally. They're no longer up and active. Delta Airlines cut their dividend completely to zero. Darden Restaurants. Ford, that was another one. A lot of investors constantly were discussing Ford in the dividend groups and Facebook and such, and just other investors always buying Ford. Ford to me was always a bit of a risky stock. L Brands, Nordstrom, Macy's, Marriott, and so on. Now the companies down here at the bottom, they didn't suspend it all the way, but they definitely cut it. So I'm not familiar with any much of these besides the Occidental Petroleum. That was when I posted over on the YouTube comment section one time that they had cut their dividend from $3.16 to 44 cents. That was a pretty good cut there. And we have a few comments such as NRZ. This was the new residential properties. This one got cut. I saw a lot of investors also buying into this in the last few weeks. And NRZ, okay. I know Apple Hospitality also was cut. I noticed that. I have just a few shares of that one in my IRA or my Roth IRA and another account, and continue to kind of hold those. They'll eventually, once it all rebounds and rent starts coming in, those will kind of get paid back again. Not down too hard overall, but that was mainly all that I posted over this week. Not a whole lot. Now the article here I kind of want to go over is how in the month of March over 10 million Americans applied for unemployment benefits. This was a huge chunk, and we already saw that we could hit numbers such as 64 million here, or 47 million. We could see 47 million, and already we're at 10 million. So we could 4x it and continue past that depending on how long this persists. Right now I'm working from home and many others are working from home, but if this persists for a longer period of time than what is expected, maybe till the end of June, maybe even into July, August, who knows how many of these businesses that are allowing working from home, how much work can we really do if no other businesses or personnel are able to go and use your products or services. Then the staff is no longer needed unless they're doing, some sort of infrastructure, monitoring the business that it's able to be up and used. So I don't know. We'll kind of see how this kind of plays out. But this is just interesting here. These 2 past weeks have erased nearly all the jobs created in the past 5 years. So just think, over the past 5 years, some 10 million jobs have been created during this whole boom. Well, guess what just happened? Just within the past 2 weeks, nearly all those jobs were just completely erased. And while those jobs are still there in place, it's just that everything is on a standstill. No one's really going out working. I know President Trump, I think they're trying to pass it so that if you do go out in public, you're required to wear a mask. I don't think it's been enacted yet everywhere, but I believe in Texas, if you're going out and about, you do have to wear a mask. Otherwise, you are fined if you are not wearing a mask. So I thought that was very interesting. Interesting time to be living. I think it's a good experience, not what's kind of going around, but you'll be able to kind of look back in the future, and it's an interesting story. So this week the S&P 500 took off about 2.08%. Now I believe this is one of the calmest weeks that we have had in quite a while. Negative 2%. This looks like a normal week in the market. It's not we are up 10%. We're down 10%. We're up 15%. This is just a normal week in the market. Monday up 3.35, down 1.6 on Tuesday. Wednesday, we basically gapped down about 3 or so percent, I believe. And then we just continue to trend lower. Then Thursday, we had job numbers come out saying that the 6 million filed for unemployment within the past week, and for whatever reason, all the investors in the Discord channels and the Facebook groups and the YouTube comments were wondering, Why is the stock market going up on a Thursday where some 6 million filed for unemployment within this past week? And then once it kind of settled and investors had a chance to kind of think it over on Friday, it sold off around 1.5%. Overall for the week, I think that was pretty decent, down 2.08. The S&P 500 is still currently down 22.97% year to date. The Dow Jones here is in third place of the four main indexes, down 26.23. Basically the same performance here for the indexes here. 5-day change down 2.7%, putting it a little bit off from the S&P. And this could have been due to some of the, was it Boeing? Yeah, Boeing came down. It was in the 150s the week prior. It's now down in the 120s. I also know Disney is trading at $93.76. I was talking with my wife today on Disney, how she believes, long term. I used to own Disney quite a while ago, maybe 2014, 2015. I didn't like that it paid off semi-annually, so I did sell out of it. But a few of these other ones here, Home Depot, I know that one got pretty hit hard here recently. So that is the Dow Jones. The Nasdaq is the best performer as far as the four main indexes, only down 1.72%. It's also the best performer as far as the year-to-date performance, only being down 17.83%. And then we have our worst performer this week, as small and mid-cap companies continue to potentially, they're getting hurt the worst. They don't really have the infrastructure unless they pre-planned it to really have employees work from home. A lot of these small mid-cap businesses, they don't usually have a lot of work at home situations. So you're seeing the companies here within the Russell 2000 are starting to get hit and have been hit the hardest. So this week, 5-day change down 7.06%, year to date down 36.95%. And this can continue to trend down lower as more small and mid-cap companies are continuing to close their doors. They put out a new order where just recently, I know in the last couple of weeks, we were able to order takeout from different restaurants. This past week, wife and I were thinking on a Saturday, or, it was during a weekday, we don't really want to cook. We spent the day kind of outside cleaning around the house, and we just wanted to order some food and go pick it up. Well, the restaurant's no longer open, and more other businesses are deciding to kind of close up their shops, lay off their employees, and kind of just shelter and doing not a whole lot of nothing. So it's really tough for those small and mid-cap companies. Stock futures right now are looking negative. So Monday, depending on how this all continues to move forward here on Monday, we may see the market open lower. That could be a good opportunity. I'm not planning. No, I should do another good chunk of buys here. This isn't exactly the bottoming out period. If we look back at the S&P 500, we had a low here recently. Let's go back. It wasn't too long ago, less than a month ago. So we're not too far away from some lows. Some 2192 was the recent lows here within the 52-week. And that was right there. I can't see the date on here. I'm sure if we just went to the Google chat or Google Charts and kind of did the date, we could see the date specifically and such, but I'm not going to be doing that. Now, as far as the week performance, now there were some sectors here that were stronger than others. As you can see here, there's a mixture out there, and you can see that the healthcare area over on the right is pretty positive. Johnson & Johnson up a whopping 8.94%, Merck up 6.3%, Pfizer up 8.87%. We have Bristol Myers, Eli Lilly up around 4 to 5%, and some AbbVie up 0.96 on the week. We also have biotech, Gilead Sciences, and a few others here. Vertex and Amgen are also positive in the week. So we did see healthcare, biotech, also oil. If you own Exxon or Chevron, they went up very nicely this week. Chevron inside my portfolio up 9.2%. Nowhere near recovering where it was, but it's nice to see that it has some support. It is starting to rebound pretty nicely as overseas Russia and Saudi Arabia are beginning to discuss. I don't know if they actually came to an agreement, but that's what kind of helped this week. They're starting to kind of mellow out. So if you look over at oils, check that out. Pretty much positive across there, except for ticker symbol HES, which does appear to be a little bit negative there on the week. But this could be a good opportunity to buy into oil. I know I have been kind of holding off on buying Chevron. I may decide to buy Chevron. I don't believe it goes ex-dividend for another few weeks or months, maybe another month or so. But still, this is such a good opportunity. It's one of those positions in my portfolio that I don't have the equity up to the point. Now, Walmart, we were discussing this one last week in our recap, or maybe it was in our Monday video. It was negative last week, and I was going, why was Walmart negative last week? Well, this week rebounded up 9.04%. We also see Dollar General up 11.01. I think Dollar General is looking like a really interesting company. Costco, you can't go to Costco without having a ton of people constantly going there. I noticed that the last time I went to Costco, there's no toilet paper still, there's no Clorox, they couldn't buy rice, and there's something else I was looking for. So Costco is constantly getting flooded with personnel wanting to buy their products, and they have actual areas where they have signs where they are not allowing products to be returned of toilet paper, Clorox wipes, baby wipes, all the little products that people are kind of stocking up on. They're not going to allow you to return that. So we did have some semiconductor companies such as Intel and Broadcom being positive. Saw a lot of investors looking at Broadcom here recently. I think that looks interesting. Microsoft, a lot of investors are throwing this one out as it's a great opportunity. Every computer in a business sector, or if you look at any business, they're always going to have most their PCs are going to be Windows based with Office 365 or Office 2016, some sort of an Office product. And they may use Teams at work, they may use some sort of other product, but Microsoft is just such a big player. And we have personal products, beverages, so Pepsi and Coca-Cola. Either one of those, I prefer Pepsi myself. I don't hold either of them at the moment. Procter & Gamble, Philip Morris, and Altria actually popping up higher as well. Altria potentially finding some sort of support down here as well. I'm not going to be adding to Altria at this time. It has a good amount invested in it. It is down a good percentage in my portfolio, but I won't be buying more of it at this time. Procter & Gamble up 4.46%. Kimberly-Clark also up 4.03% there. So the strongest sectors out there were definitely healthcare, oil, personal products, beverages, and Microsoft out there in its own little sort of world. So that is some of the sectors there. We see financials get slammed here again as credit's not being frozen yet, but if a lot of personnel that are being laid off or just don't have any job at the moment, they are having to call into their banks and ask for forbearance, which is basically just kind of putting off their paying their mortgages for anywhere from 1 to 3 months, and that causes the bank to no longer generate income from that specific individual. Now, if you have 10 million people calling into your financial institution and kind of asking to be put into this sort of forbearance period, it's going to be hurting financials here in the short term. Now, I don't see anywhere in the current time frame where financials would bounce back for whatever reason. I do think that a few of these will be cutting and suspending their dividends here very shortly. They may not yet, but they will in the future. And that's some of the reddest, bloodiest areas. Also aerospace and cruise lines, but cruise lines aren't in here. Utilities actually got slammed this week, so maybe investors are sort of moving out of utilities, sector rotation, moving out of the safety of utilities, maybe moving into personal products, beverages, and oil now that it kind of hit oil for sure, as it's showing some signs of support, but kind of interesting there. So financials, we saw them all pretty negative. The financial ETF XLF is down 6.62 on the week. Semiconductors, ticker symbol XSD, down 2.84. Home builders down 13.39, ticker symbol XHB. This one has Home Depot, Lowe's, JCI, just the businesses here. A good percentage of these businesses within this ETF, I would suppose, are probably closed down at the moment. I haven't been to Lowe's, I haven't been to Home Depot. I'm not sure if they're active. But oil, look at this, 5-day change, 31.99%. I haven't talked to any investors that were buying oil this past week, but if you bought oil this week, pat yourself on the back. The dollar moving over $100. The dollar continued to get stronger. Last week it was around 98.32. So there it is, 98.32. And it has moved higher. Not sure. We talked about this in a past video. From another viewer, commenter had posted that maybe investors, people are finding the dollar, they're finding strength in the dollar, so maybe they don't trust the market currently, so they're moving to cash, and it's kind of pushing up the dollar, just being a little bit worth more. I'm not sure how that all sort of plays in together there. I would think that with the dollar moving higher, we may see silver and gold kind of falling a bit. And plus last week, I believe silver put on a nice chunk. So silver basically flat on the week, down 0.07. Gold positive by 0.32, basically flat on the week there, both of them. Bonds moving back slowly. I saw a lot of investors here on YouTube and the Facebook groups, and also discussed over on Facebook, financial advisors kind of discussing how now is the time to be doing a portfolio rebalance. So if you hold bonds and equities within your portfolio, you may want to rebalance your portfolio in order to put more risk on the table now that your portfolio, we've had risk in the market. Risk has already hit us. We're down 20% or so in the S&P and other indexes, but your bonds have been pretty positive up until this point. Now you had that safety play with bonds. Now you can kind of take some of that bond equity, equity, move it into the securities on the riskier end. You have potentially downside potential, but you also have that upside potential as those companies recover in the future. Now, you don't want to move it over all at once. So while it does say rebalance, maybe you could rebalance a piece of those bonds, maybe moving out 5% of the capital and moving it into equities, into stocks, and then continue to do that week after week, or maybe percentages after percentages. So every 5% that the market dips down, move some more of that money from bonds over into your stocks. Bonds continue to kind of flatline here. Up the 10-year yield continuing to move lower. The previous yield was 0.63. I believe last week it was almost near 1%. Now it's, this is what's kind of bothering investors. This 10-year yield is not able to get and keep over 1. It's now at 0.59. And mortgage rates here, as we kind of scroll down here, mortgage rates last week were 3.75 and currently 3.74. So really not too big of a change. I got a call from my mortgage company asking me, they basically said, hey, we noticed you have a rate of 3.75%. We can offer you 2.25 or 3.25%. There's no cost to you. Everything would be paid for. We'll take care of it all. And then they sent me the information, and there's a few fees in there. You wouldn't get charged for them, but they're going to get tallied onto your loan. So if you owe $100,000 on your property, on your mortgage, they would take the cost to refinance your loan. It could be anywhere from $2,000, $3,000, $4,000, and they'll tag that back into your loan. So anything you've paid over these past few years on your mortgage, your principal, you're basically just kind of getting it back on. So unless they gave me a 2.75 or 2.5% rate for my 3.75 or 3.25, I think is maybe what I have, but it really wasn't worth it, especially with the fees, basically restarting my amortization and such. So that is basically all I wanted to cover in today's video. So if you guys did enjoy this video, definitely give this video a thumbs up. If you guys have not yet subscribe to the channel, and if you have any comments at all, drop them into the comment section below. I'd really like to hear from you guys. What do you think this next week is going to, how do you think it's going to play out? I do see more negative news out there versus positive news out there, but it does look like we're kind of slushing in a sort of a trend line here. So if we just look at this past month, we sort of hit a bottoming period here. I think we're just kind of trending. Are we going to move higher? Are we going to move lower? It's really hard to tell what exactly is going to be happening here in the future. We're just sort of trending and kind of waiting for more news. Is the news going to be good news, or is the news going to be bad? That is what's going to affect the future. If we continue to see unemployment numbers rise, if we continue to see the date and the extension get pushed off further than what's currently in the market right now, the 12th of April, I believe, is where businesses are potentially looking at reopening. But if that gets extended out, that's negative news. Unemployment numbers continue to roll in. That's negative news. This issue that's kind of going on is continuing to spread and affect more and more people. That will be negative news. So we're all sort of waiting for what will happen, and that's what will kind of go into the future there. So that is going to wrap up today's video. If you guys did stay tuned all the way to the end, definitely drop a thumbs up in the comment section letting me know that you guys stayed here till the end, and I will definitely make sure to reply back to you. All right, thanks for tuning in. I will see you next time. Bye-bye.